And I am curious, when we look at some of these deals that we've seen, particularly over the last few weeks, mega deals here, there's a lot of questions now about sort of what's left in the tank, what's left in the pipeline. Is there more to come, or are we just basically getting it all out of the way now?
Well, I do think that there was a bit of deal activity over the summer and in September, which was really just deals that should have happened in March, April, and May that were put on hold and then happened when conditions got a little bit better. Now what we're seeing is really companies starting to think about where are we going next. And while the economy is okay but somewhat weak, what they're looking at is post-pandemic, this is going to probably be a pretty good and vibrant economy with the savings rate being fairly high and people wanting to get out and starting doing things. And so I think what you're seeing is the beginning of a brand new M&A cycle. So this is the beginning of a lot of consolidation in the marketplace.
It's quite a statement, especially right now, Frank, when we're seeing so many firms that are trading higher, that are trading above the offer price. Is this setting some ground for bidding wars here?
I think it is. I certainly am seeing a lot of activity where companies where you've called them up and said, if you're ever for sale, if you're ever contemplating a sale, give us a call. And you don't hear anything for months, sometimes years, and then suddenly you start getting calls. What happens is that one bid begets another, and activity in a sector begets more activity in a sector. And that's what we're starting to see. And that's why I say this isn't just a company here and there deciding to do a deal. This really is the start of a new cycle. And, I've been doing this a long time, 37 plus years now. And when you start to sense that level of activity and you see it across geographies, across different sectors of the economy. And, even at these high prices, and people say, well, shouldn't you be buying when they're low prices? That's sort of the way investors look at it. But when company executives and boards look at it, they think of it much longer term.
What can stop the party then?
Clearly a black swan event. I mean, last year we went into the year and everyone thought it was going to be a very good M&A year, maybe not as robust as what we're looking at right now. But right after the new year, there was the assassination of the Iranian general in Baghdad and the potential of war. So that put things on hold. Then, of course, we had COVID, first in China, then moving to Europe, and then obviously the shutdown in the United States. And that really stalled out everything. So if something like that were to happen, that would certainly put things on hold. If the central banks repeated what they did in the midst of the financial crisis with freezing liquidity, that would certainly do it. But the central banks seem to have learned from the financial crisis. There seems to be plenty of liquidity, low interest rates, and with a low growth economy, companies are going to need ways of growing the top line and the bottom line, and synergistic transactions are certainly the best way to do that if there's not going to be organic growth.
Frank, a lot of people, just today somebody was telling me that the Salesforce deal is generating some confidence for more buyers to put down these incredible large valuations for deals. Do you see that happening? Is it going to just cost more moving forward to get a deal done?
I think it is going to cost more. Again, certain, if you're in tech, if you're in healthcare, you can certainly afford to pay bigger premiums because the returns are there because of the growth potential. If you're in industrial or retail, the premiums are going to be lower. If companies are trading at 52-week highs or historic highs, the premiums are going to be lower. So don't look for the same level of premiums in different sectors. I think you have to evaluate each company, each transaction, and different sectors differently.